Well, good morning, everyone. Welcome to a new week in the markets. Welcome to a new year. So Santa, he done be gone for this year, and we are ready to rock and roll. So we did our first class of the year on Friday for trading a smaller account. We reset the account. We placed 3 or 4 trades. One of them has already hit our target. And so we're going to review that. And then we're going to, because we've reset the account, place a bunch of new trades and talk about our thought process behind it. If you missed the class on Friday where we were talking about goal setting, we talked about, some people may set a goal of wanting to beat the benchmark. Others may say, I don't care what the benchmark's doing. I have a $25,000 account that I'm starting with. I want to average a net gain of $100 a week or $200 a week. And, you can make your goal whatever you want it to be, but how will you know if you're getting what you want out of your investing and trading if you don't know where you're going? So without further ado, let's get into it. If you are not following me on X, you're missing out at Barb Armstrong CS. Kevin Horner is with us in the chat today, and he posts a lot of great content as well and brings a wealth of knowledge to our team. So at Kevin Horner CS, you'll want to make sure you are following Kevin as well. And to all of you who are here bringing this class to life, I want to thank you to see you and Stay Gold, and her name was Lola, like some of the greatest handles in this group, and Sandeep and, the rest of the gang. Thank you all for being here and for being so participatory in the chat. Just as a reminder, before we get into the thick of things, options carry a high level of risk, aren't suitable for all investors. We use the Paper Money software application on the Thinkorswim desktop platform. It is a brilliant place to learn. There are some nuances and differences between Paper Money and your live account. One is that short options will never be assigned early in Paper Money. That can happen in a live account, and we discuss that as appropriate. So we're going to do a super quick market overview. One of the great things that Kevin brings to our webcast curriculum is a Trader Talks webcast at the market open at 9:30 Eastern, 4 days a week. And this morning was one of them for an in-depth overview. Please look at that market overview because ours will be pretty quick. We're going to look at our trades that we placed on Friday. So we have a very shallow book of trades right now since we reset everything. So our main focus will be on placing new example trades. And if you have never been to a live event, Kevin and Ben Watson and Rachel Dashel will all be in Dallas this weekend, for a 2-day intro to technical analysis and intro to options. I'll be with Ben in the Seattle area at the end of January, and then the first weekend in February in Sacramento. These are free to attend. You just have to show up. We'll have the coffee on. We'll provide breakfast and lunch. And if you've never been to one, this is how I got introduced to the world of trading back in 2011. I was a huge fan, and I'm a huge fan to this day. I love getting to go to these things and to meet all of you and discuss some of your goals and aspirations. So without further ado, let's, Synchrony Financial. Don't know that we'll get to that one today, but when we look at the S&P 500, it's definitely been uptrending. If we look at a 1-year chart, and I know lots of people have been talking about this, I'm just going to change this to show prices percentage because my year to date now is showing, how we've done since Friday. But, the S&P was up 15% last year. And it's close to its all-time highs. The NASDAQ was up 20. And it's been setting up a little bit of a pennant pattern, but, moving to the upside again today. When we look at the Russell, it too is close to its all-time highs. I guess I could get rid of these now. Let's just clear the whole drawing set. And it is up 12% basically in the last year. And then, not to leave out the Dow, it's hitting a new all-time high today. So yay Dow, and up 15% in the last year. Okay, so that's where we're sitting. Our volatility, or some like to call it the fear index, sitting at the low end of the range, is sitting at 14.7, which it shows a relatively high degree of confidence in the market overall. The other thing that I've brought up is, you can simply, if you don't do this already, go to sector indices. And then I have customized this to add description and a 4-week and a 3-month return. And we can see that financials and materials have been very strong. And so we're going to look at, and then industrials. And so we are going to look at a couple of stocks in these leading sectors. And then if I click on financials, we can see that, this sector is hitting certainly a 1-year high. I think it's an all-time high today. Materials sector pretty strong, industrials as well. Okay, and this is over the last 4 weeks. Okay, so I'm going to just compress this a little bit. To review the one trade that has hit our target, let's look at C, or Citigroup. And so one of the things we talked about on Friday was, maybe you have set this $25,000 aside that, it may represent not all of your portfolio, but part of your portfolio. And you might say, well, I would like to be able to make $100 a week in income, or I'm just starting out and I'm not going to need this money for 40 years, but I'd like to be able to grow it. And I'm a goal-oriented person, so I want to set a target. And so we placed a bunch of shorter term trades kind of with this in mind. And the idea here, we had let me just get rid of that line. We set a short-term target here. We placed this trade on Friday because we had a bull flag set up with a close above the high of the low day, or it was moving above the high of the low day. And we said, hey, if it just gets back up to this previous high, which at the time was 122.84, we set our target for 122 and it hit it. It's now at 123.42. So are we losers because we set too low a target? No, we set to ourselves, hey, if it hits this, we're going to be happy campers and we'll be happy with the result. And so when we came to the monitor, if we come to the monitor tab and we say, okay, let's look at this. So we had set a target of 122. It got filled at 122.02. So, and sometimes these might turn out to be a bit of a paper money fill, but the stock has continued to go up. We bought 42 shares. Why 42? Well, we bought 42 because our guidelines for this class is that we don't want to have a position size larger than $5,000. So this was about a $5,000 position with our 42 shares. And we didn't want to risk more than $500 on any one trade. So how did we do on this one? AP 514, has got it. This has turned out to be a base hit. We made $4.06 a share. Now, because this was a stock transaction, a stock purchase, there were no transaction fees. With options, there are. But we ended up netting $170.52. Sorry, that's a 7. Okay, I'm really messing it up now. 170.52. And if we look at that, well, we made $4.06 a share on an investment of 117.96. So what is that as a percentage return? And I didn't calculate that, but if I take 406 and I divide that by 117.96, that's a 3.44% return. And when we're in this, how long? 1 trading day, 3 calendar days. So, we call that a base hit, not too shabby. Okay, so that's that one. Our first our first realized gain in this paper money, in this example account of the year. We also on Friday, and you'll want to go back and watch the recording if you missed it, we did a buy right covered call on Intel, which has a modest return. And then we also did a stock trade on Micron with a target. And this one was a Fibonacci target. So that was Micron. And that was up earlier today, hitting a new all-time high, and now it's pulling back. And then INTC. We did 2 trades on Intel. We did a buy right covered call, which expires January 16th. We wanted to be out of it prior to earnings, which is coming up on the 29th. And then we also did a long call with a swing target. And we're going to compare those two, once we're out of those trades. And so that, we're up a modest $16, but that represents a 5% return because, buying the call is certainly less of an investment than buying 100 shares of stock. Okay, so what are we going to do today? Well, given that materials and financials have been so strong, I thought we could look at AU. So this is AngloGold Ashanti. If you've not heard of it, it is in the materials sector, and they may say like all that glitters is not gold. This is up in Colorado, which is Kevin's neck of the woods, but and they operate gold mining companies in Africa, Australia, and the Americas. Gold has been strong. So while they may say all that glitters is not gold, gold has been, catching a lot of people. The glitter has caught a lot of eyes. And so, we have traded this in the past. How do I know? Because I've got these, little symbols from last year. But if we come in and look at this, what might we do? Well, could we, do a long call, with the expectation that this uptrend might continue? And we're at 89.25, we're close to the previous high. So instead of doing a swing trade, maybe could we put a 1 ATR target on this? And if you don't have this on your chart already, just come in and type in ATR and then click add selected. Now I've already got this on here. And what this does, if you don't know, you can click the little question mark and it will load a description, but it basically takes the range from high to low over the last 14 days for that stock and comes up with a number. Okay, so when we look at this, our number here is 355. On an average day over the last 14 days from high to low, this stock has moved about $3.55. So could we go out and buy a call? And, one of our parameters does this stock on average trade 1 million shares a day or more? So we could look at that and say, well, we're already at 9:23 and we're early in the day. Are the options heavily traded? Well, we've got almost 3,000 in January. We want to come out to February. And why is that? Because we don't want time decay eating our lunch. If we come here and we bring up the Greeks, we can see that time decay, because January only has 11 days to go, is 15 cents a day on a $3 option. So if you bring up your calculator and you say, well, as a percentage, 15 cents a day divided by $3, that's 5% a day we're getting nicked with time decay. Where if we come down here and we say, well, this is only, what's this, 90 strike? Go to the same strike. This is 7 cents a day on a 650 option. So if I take my 7 cents a day and I divide that by 650, that's 1% a day. What looks more appealing to you? Like the 1% looks more appealing to me. So if we look at this strike now, remember rules, position size, we don't want to risk more than $500 on any one trade. So we can't actually afford to do the 90 strike. We'd have to do the 95 strike, because how much could we lose? We could lose all of this amount. And you might say, well, we're going to put in a stop and we don't have any intention of losing all of it. Yeah. But if we're going to err on the side of caution, we're going to say this is how much we could lose. Okay. So I'm going to bring up, let's see, we're going to add a new gadget, a scratch pad. And this is going to be an example of a 1 ATR trade, and it is AU, and the 1 ATR is 355. And so our target is going to be today's high. So we're going to come and just hover over this. Our high today is 90.26. So we're going to say 90.26 plus 355. That's when we want to get out. I think a little decimal doesn't mean much, but it actually does. So that would be 93.81. Feel free to check my math. And our exit is going to be, hey, if this doesn't go the way we're expecting, we want to get out quickly. So when we look at our low for the day, 88.13. So we're going to take 88.13 and subtract 355. And that's going to give us 84.58. Now, if it doesn't go up and hit our target tomorrow, this is something we manage daily. Then tomorrow at the end of the day, we're going to put our stop 50 cents below the low of tomorrow's candle. And then on Wednesday, if it doesn't hit the target, then we're going to move it up again. Now, if it had a big move, say tomorrow, and then, we get a candle like this, we might decide to just exit the position. So it doesn't mean you have to stay. If it gets up to 93.51, we might say, hey, good enough, and take it. Okay? 84.58. Thank you, AP 514. I have missed you. He's my math. He or she is my math checker-upper. Okay, so we're going to come out here to February. Why are we doing the 95 strike? Because that's what we can afford. And so we are simply going to buy a single. We're going to come down to single, make it a first trigger sequence, right-click anywhere on this line, create an opposite order. We're going to make it good till canceled and a market order. And then we're going to click on our disappearing, reappearing sprocket, which will bring up this sheet. And we're going to say, hey, if and or when AU goes above 93.81, get us out. Let's take the money and run. Or if this goes below 84.58, get us out. 84.58. 84.58, 93.81, check, save, confirm and send. And feel free, even within the confines of your own home, to read this stuff out loud to yourself. I am buying a call. Why? Because I'm bullish, right? Right. I'm paying $460. My max loss is $460. So is that less than 500? Yep. So are we good? We're good. We want to sell it when it goes above 93.81, check, or below 84.58. This is a 1 ATR target and exit. And so we're going to put that in our long call bucket or group. It's technically called a group. Okay, so we know when we're getting out before we get in. Okay, so we'll just wait for that to kind of mosey along and fill. Now, and there we go. Now, today is not officially sponsored by the letter A, but we do have 2 A trades. So if we look at American Airlines, and the airlines, have had some struggles, but, I went and put some gas in my car and it was like 60 cents a gallon less or 50 cents a gallon less than the last time I bought gas. So that was kind of a happy circumstance. So you can imagine how the airlines feel because their tanks are a lot bigger than mine. And so, American Airlines has been kind of moseying on up the hill. And here it's moved up again since we first looked at this. It was sitting at okay. It's continued to go up, but could we say, hey, the recent high here, if we're looking at a shorter term chart, is 1635. And could we buy a call and just say, hey, if it goes up by, this 40 cents, would that be worth our while? Well, let's check it out. So if we come here and we look at February, again, the same things apply, right? 30 cents on 50, or a theta of 3 on 50 versus 1 on a buck, with a 16 strike. If we look at this and say, well, does it trade 1 million shares a day? Check. If we come back to, show volume, we've got thousands of contracts here. But if we say, okay, if our target on this is 1635, and it's now at 1593, 1635 minus 1593, is this trade even worth placing? Is anybody thinking that? You could be. Well, you could say, well, let's come to our Theo price and just see. And so the first thing you do is hit reset. And we're going to say, okay, if this goes up by, say, Friday to our target, so it goes up by 0.43, which seems modest, and then just click enter anywhere. So that would hit our target of 1635. How much might we make? Well, if we're paying 106, and if we got out at 124, volatility stays the same. And if we hit the target by Friday, we could be up, that looks like about 20% to me. And that's, if you think, well, that's acceptable. Now, we could also end up losing on this trade, if it comes down. But, with a swing trade, we're going to put our exit at 50%. A 50% loss. And so some might say, well, shouldn't we buy twice as much then? Because we have a stop loss in place. No, we're not going to do that. So we're going to do 4. That keeps us under 500. And then we're going to do a single order, first trigger sequence. Actually, with this one, we can do it this way. We can come to buy, buy custom with OCO bracket, because we're going to put a stop in at 53 cents, so half the value. We're going to click our, make this into a paper clip, and we're going to do 4 contracts. And then our target is going to be based on the price of the stock. So we're going to make both of these good till canceled, and then click our sprocket and say, hey, if American Airlines, if and when, if it gets up to 1635, we want to exit. So, this is just, we're looking for base hits. We're not, we're not looking to be in this for a long time. If it could go up and hit our target tomorrow, we'd be happy campers. Okay. Are there any questions on the rationale behind this? So how much could we lose? $424. Is that under 500? Yep. What's our max profit? It's saying infinite, but we put a target in here. And so we have a guesstimate. This isn't a guarantee. It's just an estimate. And so we're going to put this in our long call group and just put a note in from us to ourselves saying this is a swing target. Okay. So there's number 2. Number 3, we're going to go back to the world of gold. And this is Newmont Mining. And so some people might be saying to themselves, you know, like you make this whole option thing look kind of simplistic, but I'm a little nervous. Can you give me a stock example? Well, if we wanted to do a swing trade on Newmont, which, you know, has certainly been uptrending in the last year, and, you know, it had a little pullback, and on Friday we had, you know, a close above the high of the recent low day. And, you know, it's moving up again today. It's up 2.5%. Could we do a swing trade and would it be worth our while? And you might say, like, Barb, it's almost there. Like, can't you see? But if we look at that 106.34 and we subtract the current price, 103.72. Oops, sorry. 106.25. Let me try that again. Those little decimals, they get you. Oh, 106.34 minus 103.68. So like it's just under $3. But if you take 272 and divide it by 103.68, like that's 2.5% or thereabouts. Like if I was a guessing person using my mathematical, okay, we're off by 2 decimal places here. So that's about a 2.6% potential return. And if you said, well, like that's not all that in a bag of chips, and you may be right, but it's not nothing. And if we said, okay, well, you know, where might I put a stop? So how much risk am I going to take? Well, you might say, hey, here was our recent low, 97.67, 97.67. I'm going to take that and look at a price 3% below that, so 94.73. So I'm certainly risking more than I can make. And so some might look at that and say, well, then, you know, I'm not going to place that trade. And some might say, yeah, like somebody said, I don't like this candle. But if we're buying the stock, if it pulls back a little bit and we look at this kind of recent support level, unlike an option, we've got some kind of time for this, you know, if it goes sideways to come back up. With the option, you know, we have time decay working against us. And so, you know, you might want to play along and place this in your paper money and make a note, like, I didn't like this candle on this, you know, example entry date. But we're just looking for an example of a small potential gain. And if we look at this and say, if we take our 5,000, which is our max position size, divided by our 103.67, the current price, we could do 48 shares. And so, you know, that would be about $125 to $130 if it hit our target. And we could lose, well, if we had 48 shares, you know, we could lose double or triple that if it comes down and hits that stop at 94.73. You know, if we lose, you know, $8-ish a share. So, and based on that, some might say, no, I don't like those odds. I'm not going to take that trade. And others might say, you know, I like this idea of a swing trade, you know, where I'm just in it for a short period of time, swing target. And we want to, whoops, I seem to be having trouble typing today. And we're going to make that 106.34, just the previous high, with the expectation that sometime in the next few weeks, like today, it got as high as 105.86. So, that's only 50 cents away. And this is a live candle. Who knows what it might do by the end of the day? So we're going to do this as an example of a stock trade. We're going to right click anywhere on this line. We're going to buy custom with an OCO bracket. We're going to adjust our quantity, and we've already got our paper clip in place there. So 48, and then if I hit enter, it will correct the volume for everything. Our target on this is 106.25. Or was it 34? 106.34. $106.34. And our exit is going to be at 94.73. And you might say, well, I wouldn't mind doing this example trade, but I want my stop to be tighter. The tighter you make the stop, the higher the probability that it might be hit. So if this continues, to move up, and let's say it comes down and bounces off this again, could we consider adjusting the stop? We could. Or could we just be patient? We could do that too. But, we're seeing that, things are looking strong with Newmont. So we're going to go ahead and place our trade. Confirm and send. And this is a stock with a target. Now, why not do a buy right? Well, because we can't afford to buy 100 shares. So that's not an option. That's not a choice. Now, other airlines have been strong as well. And so could we look at something like, a Love? And Love has been going a whole lot of nowhere, right, for quite some time. From July through the end of November through Thanksgiving. And then it really started to kind of mosey on up. We do have earnings coming up on the 28th. But this seems to be holding well. Today, the stock is up 3%. Could we do a short put vertical, which is a strategy that might be profitable if it just stays above 40? It doesn't even have to go up and hit a swing target. It just has to stay above 40. And ideally, we want to be out before the 28th, because what can happen with stocks during earnings season? There can be a little bit of gap action happening. And so what did we say? It was the 28th. So we might not be able to place a trade and get enough premium. So if we look at this, we're at 40.72. We come in, what was our low here on this day? It was 40.85. So maybe we could do the 40.50. But if we look here at this 40.50, we have a 20-cent bid-ask spread. That's just too wide. Now, if earnings is the 29th, could we come out 25 days and say, we'll make sure we close it out? We could potentially do that, but now we don't have a 40-50 option choice. It's either 40 or 41. And when something's, under $1, the odds of getting enough premium to make it worth your while are going to be lower. So how much are we risking here? Well, we're risking $1 minus the 23 cents. So we're risking 77 to potentially make 23. So if I take 23 divided by 77, that's a potential return of 29%. And actually, that does meet our criteria. If your criteria in your example trading plan says, I want to make at least a return of 25% if I'm in it for 25 days. Now, let me just check this is the 28th. We'd have to be out of this by the 27th. And so, you know, if we look at this, and this is one of those strategies where we want it to go down in value. Now, some might say we're going to pay a lot in fees. What if we did a $2 wide strike? Well, now we're not getting double. We're not getting 44. Is that still worth our while? 39 now divided by $1.41. 27%. So that still meets our criteria. And so if we said, okay, we're going to do this $2 wide spread, the advantage of that is that the probability of it going through both strikes is lower, 35% versus 46. And the probability of it being in the money at expiration is also lower. You know, so, but our goal is going to be, and how many of these can we do? We could do 3. Oops. Because if we do 3, how much are we risking? $483. Okay. So that's within our realm of acceptability from a risk perspective. And then we're going to right click and say, hey, when this is worth 4 cents, we want to buy it back. Now, again, if we meet next Monday or on Friday and we've already got 50 or 60% of our max gain, you know, we may choose, you know, to buy it back and get out earlier. We may not wait until we're quite here. Okay. So we're going to confirm and send, and we're going to put this in our short put vertical group. Okay. And again, this is kind of more of a bullish to neutral strategy. It just has to stay within our range. Okay. Boy, we are clipping along today. Like, holy smokes. Okay, let's go and look at BAC. Well, we've got earnings coming up here. So this is one of these things where, you know, we've got earnings coming up, and financials are one of the first to come with earnings. So when we look at, Citigroup was another one. We just did a trade on Citigroup, but this one has earnings coming up soon also on the 14th. So that's next week. So you may say, well, you know what? It's breaking out. So could we do another like one ATR trade expecting that this might continue to go up? You know, and we could do that, you know, because if we look at this and we say, okay, this is a bull flag pattern. It came up, higher low, moving up. So this is just, if we look at this logic, how far might we expect it to go? Well, if I duplicate this, you know, we might expect it to go up to about what, 128.65. So could we do a 1 ATR trade on this? It, you know, with the goal of being out, but just taking advantage of the fact that it's breaking out above the previous high, and this sector seems to have some momentum. And so, you know, if we want to walk through this and do another example trade, if we look at C, our 1 ATR on that, this is Citigroup, is 263. And then if we look at our target, today's high, well, it's right there on the chart, 124.03 plus 263. So that would be 126.66. And our exit would be today's low. And the low is 119.30. minus 263. So 119.30, I've got my little calculator right here, 119.30 minus 263, 116.67. Okay. So how do we put this in again? Repetition is the mother of all learning, right? So we're going to come out here. Are we coming out to January? No, we're going to the February monthly. Why the February monthly and not a weekly? Because this has so much volume. Like we have 11,000 contracts at the 130 strike. We've got 1,700 contracts at that 460 strike. And we're only intending to be in here for a few days. And so if we look at this and say, okay, well, we're going to buy. And then our single order becomes a first trigger sequence, right click, opposite order, make it a market order. That's good till canceled. Click our sprocket, put our target in first. And there's no rule around that. It's just habit. 126.66, exit 116.67. Save, confirm and send. Again, read it out loud to yourself. I'm buying a call on Citigroup because I'm bullish, right? Right. How much am I risking? $470. Is that okay? Okay. I want to get out if it hits above 126.66 or below 116.67. When am I going to adjust my stop? Tomorrow after the market close or Wednesday before the market open. And it's just another example. And, we're only doing one here. So I really like this question. Is it better to buy like at the money or in the money or out of the money? This is just a plain old long call with a long target. You may want to run the numbers and see, because if you look at Delta tells us that if this stock goes up by a dollar, then the value of that option will go up by, and I think in this case, it's 50 cents. And then what you may want to do is calculate that as a percentage. So if we come back and look here and say, okay, if this goes up 49 cents on 465, would I be better if it goes up 21 cents on $1.41? Would the percentage return be higher? Yeah. And so the answer, yeah, we'll explore that more on Friday. Because now, my friends, we have to wrap. So there is a survey today. One of the questions that I frequently get or comments I frequently get in the surveys is, please review at the end of the class what you did in class today. So as you can see, we did a whole bunch. And what is the common thread here is that we're looking for base hits. We're looking for short-term trading strategies whether we're using stocks or options. We bought a call on AU. We bought a call on, or four calls on American Airlines. So AU was an ATR target. AAL was a swing target. Newmont Mines was a swing target. And then Love, we did a short put vertical on Love where we just want it to stay above our strikes. We're going to close it out prior to earnings. And C, we did a long call with a 1 ATR target. So we crammed a lot in today. So here's what I ask of you as we wrap up our day. So 1, hit the like button. It helps move this up in the algorithms on YouTube so that more people can find this content. 2, hit the subscribe button if you haven't done that already, because it just gives you access to the archives. It makes it easier to find. So Subscribe to the Trader Talks channel on YouTube from Schwab Coaching. Follow Kevin and I in the land of X, Kevin Horner CS, Barb Armstrong CS. And last but not least, Kevin has pinned the survey, if you're watching live, in to the top of the chat feed. So if you'd click on that link, there's 2 questions. One, I hated it. 10, I loved it, and everything in between. There's also the ability to put comments in there. So if there are topics you'd like me to cover, let me know. If you think this pace is too slow or too fast, let me know that as well. So yeah, I promise if you fill it out that I'll read each and every comment. So guys, thanks to Kevin for being with me in the chat today. He always does a great job. Thanks to the guys behind the scenes, and thanks for all of you for continuing to show up. Take care, everyone. We'll see you tomorrow in Getting Started with Technical Analysis. Up next, Mr. James Boyd. Take care, everyone. Bye for now.